In this video, we're going to be discussing how to prepare a watch list for the best stocks to trade. Welcome to the Options Trader Lounge, where we talk about generating income and growing your wealth within the US stock markets using options. Thank you all for tuning in. We have a good one for you, so get yourself a drink, sit back, and relax because we have a lot to talk about. Now, if you could also do me a huge favor, go ahead and hit the subscribe button so that way you can get notified whenever our videos are released. Additionally, if you could go ahead and hit the like button down below, it'll definitely help out with the algorithm so that way this video is recommended across YouTube. Now, to my point here, we are going to be discussing how to create a watch list. A watch list is key to trading because what it essentially does is that it allows you to be prepared before the trading week. Figuring out which stock to trade, whether it could be the most hot sizzling stock that's gaining X amount of points, you can definitely trade that way. However, to me, that's not simple. The whole idea about creating a watch list is to make your life simple, to be able to be prepared whenever the stock moves into your favor and when it allows you to have a good risk reward entry. Allowing yourself to create a watch list allows you to have a set amount of stocks that you'd like to follow and stocks that you believe has good opportunities, and your whole goal is to execute whenever the trade comes into your favor. So creating a watch list is very important, and this is how I like to create simplicity in my trading. So how do we create a watch list? Well, aside from looking at the SPYs, the QQQs, and the Dow Jones and IWM, which is the bread and butter of trading, in my opinion, because it allows diversity. But if you're trying to trade individual stocks, what I like to do is to look at the top S&P 500 stocks. And this is a default setting that's created by TD Ameritrade. And literally what I like to do is organize it from the most gainers to the most decliners in that order. And literally all I do is just flip through. And what I'm trying to look for is trend. And ideally, what I'm trying to do, because we see that the S&P 500 is trending up, I like to pick stocks that move in the same direction of the S&P 500. So if the S&P 500 is trending up and higher, then what I'm trying to do is look for stocks that trend in that same direction. So as we flip through these default stocks that's provided by TD Ameritrade, I'm literally looking for stocks that trend higher. The first one that we have here is WBA, and clearly this is not a higher trending stock. So this is no-go for my watch list. So let's continue. This is slightly moving up, but at the same time, you're seeing a lot of ups and downs that doesn't produce a strong trend. And again, we're looking for strong trends. Obviously, you have Tesla, where the past 4 weeks is continuously moving higher. Now, Tesla is a well-favored stock, and obviously you have to be very skilled to trade Tesla, and really understand your risk management. So this is a no-go for me in terms of my criteria. So let's continue. Nothing here. Nothing here. This is literally going sideways. Colgate. Visa is slowly trending up, but again, there's a lot of congestion that's right in between here. So again, we're looking for trend. Nothing here. This is another decline. PayPal is literally destroyed. Adobe is slightly picking up gains. However, there's a lot of overhead resistance at this 500 level. It looks like it is approaching there, but it clearly got rejected this past week at the 517 level here. You can see a lot of sellers back here in 2020 through 2021. So where are we? Adobe. So it's GE. Oh, look at that. GE, you have a clear, strong trend higher, and this is pretty interesting. However, it's hard to say. Let's move out over to the all-time weekly chart, and that is a no-go for me. What I'm currently looking at is a 3-year weekly chart. So that is how I'm trying to figure out which stocks are favorable. Okay. Coca-Cola. There's definitely some range here. Lockheed Martin. 3M is a complete decline. Ah, right here. McDonald's. And so what do we see here? A strong trend. You are literally getting higher lows. Oh, what the heck is going on here? Let me fix that for you all. You're literally getting higher lows and higher highs. So what can we take from this? When we have strong trend in the S&P 500 that goes up, and when we have a strong trending stock like McDonald's that also moves up, then that just means that we're moving in the direction of the overall market, with McDonald's being a strong leader and a contributor to the trend. So with this stock, I would definitely add this to my watch list because what it allows you to do is to monitor the price movement of the stock. And what you can do at this point, once you have identified a trending stock, is all you need to do is to create alerts. So we know that this stock is bouncing off of what I have here in yellow, which is the 50 exponential moving average. It bounces and hugs this level, and then it moves up and creates higher highs. Obviously, it was struggling around this period here in 2022. That was during the downturn in the S&P 500. However, on the weekly chart, it was clearly holding above the 200 weekly chart, or the 200 weekly uh, moving average. So with this in mind, we can have a clear view of where trend is, and also we can also have a clear view of where buyers are sitting and waiting. And so all we need to do at this point is to create alerts. So I'm going to put a create alert here at the 280.54 level. If the stock moves below, at or below, I'm hoping that it does. And at that point, if it does, I'm I'm going to be watching that trade. I'm going to be watching how it reacts at the 280 level. If the market looks like it is supporting that level and buyers are stepping in, that is where I will be buying in at these levels. And to me, this is how you practice good risk reward management. By finding strong trends, we can have the higher probability on our side that if we buy low, the stock will recover. And we can count on that because in the past it has done that consistently. So all we need to do now is just wait for price to move in our favor, and once it does, we watch it. Once we get the alert notified to us, we watch it react to this 280 level, and once buyers start to step in, that's when we can execute the trade. And with knowing that we have good risk rewards in this favor, and all we do is just wait. Because at that point, once you enter the trade, the idea is that the outcome is unknown. We obviously don't know what's going to happen. The price can move in either direction. It could move up or it can move down. That is not our job to predict. Our job is to practice good risk management. So entering the trade is the key. When you can execute with good risk management, that is all you have. What what I mean by risk management is knowing where your stop losses are. If the stock moves below your stop losses, you have to get out, because the key is to practice good risk management. If the stock gets you out, you're out. If the stock moves up in our favor, you take your wins and you move on to the next trade. So that is one trade here that I'm definitely going to be watching once it moves to the 280 level. That is where I am interested. And let's move on. So Kraft, Johnson Johnson, Cisco, Boeing, nothing here. Here we go. Pepsi. Now this to me looks like a really good setup even to enter in at this level, because what we have here is a really defined strong trend. Again, we have higher lows and higher highs. And where are we sitting? We're currently hugging the 50 exponential moving average. We actually got a test right here on 2 weeks ago of this level, and this week alone we are now above the prior week's trading range. So that is a good setup. That just means that buyers are stepping in, and obviously we can expect this move to move higher. And at the same time, again, we don't know the outcome. But if you were to enter in now, what you have at this level is a good risk reward setup, because you have buyers at this level. Again, you have this defined resistance area that now is support here. And if the market were to go down, you have buyers that can obviously pick up, but and obviously the risk is pretty low at this level here, which allows you a good risk reward ratio, because that just means your risk is low, but your opportunity is high. And that is how you want to watch these stocks, especially if you're trying to practice consistency. This is one of the best ways to do it, to follow trending stocks that are aligned to the major indices like the SPY. And again, to be alerted whenever the stock trades in your favor. And so that is how I like to trade. That is what I look for whenever I'm looking for trending stocks and creating a watch list in general. So if you've enjoyed this video, make sure you hit the like button and subscribe to the channel so that way you can get our future videos whenever they're released. Thank you again, and we'll see you on the next one.